If you're self-employed, the IRS expects 4 tax payments a year, and most people find that out the hard way. Almost every self-employed person who gets into tax trouble already knows the rules. The problem is not knowledge, it is fear. When a deposit lands, you know you should pull taxes off the top, but you also don't know when the next check is coming, so you freeze. The money sits, and money that sits leaks. W-2 employees never see their tax money. It disappears from every paycheck automatically. When you're self-employed, there is no employer, no withholding, and no one sending money to the IRS on your behalf. The IRS wants 4 installments throughout the year. Miss them and owe more than $1,000 at tax time, and they add an underpayment penalty on top. Self-employed people pay 2 distinct taxes on every dollar of profit: federal income tax, which everyone pays, and self-employment tax, Social Security, and Medicare, which W-2 workers split with their employer. You have no employer, so you pay both halves. That's 15.3% before your income tax rate even enters the picture. Combined, most self-employed people owe between 25 and 40%. That is why setting aside 30% on every deposit is not paranoid. It is math. 3 methods exist for calculating your payment. Safe harbor is the simplest. Pay 100% of last year's total federal tax. Split into 4 equal payments. Even if you earn more this year, no underpayment penalty. The per deposit method is the one built for inconsistent income. Every time money lands, a fixed percentage moves to a separate tax account. 30% is a good starting point. When quarterly deadlines hit, the money is already there. No scramble, no crisis. The most common mistakes are predictable. Waiting until April and paying a penalty for it. Guessing your rate too low and forgetting self-employment tax. Calculating tax on gross revenue instead of net profit after expenses. Paying federal and forgetting your state. And the worst one, panicking during a bad month and skipping the payment entirely. Every one of these is avoidable with a system that runs deposit by deposit instead of all at once in April. Year 1, taxes feel like an ambush. Year 2, if you built the system, they are a line item. Money moves to the tax account on every deposit. Quarterly payments go out on schedule. By year 3, you barely think about it. The fear of the next check does not keep you from setting aside what the IRS needs. April becomes a reconciliation, not a crisis. From unable to able. Try it free for 30 days at becomeable.app.